That what were the factors at play in Q4 as well as what is the outlook going ahead. For this, we are being joined by Arun Jain, who is the Chairman and Managing Director at Intellect Design Arena. Hi Arun, very good afternoon and thank you so much for your time to ET Now. Firstly, Arun, on the results, one of the factors that we could highlight that did impact your earnings was GEM business. That actually resulted in a $7 million revenue loss on a sequential basis. So wanted to understand, do you expect to fill this gap with the government e-marketplace completely by Q1 of FY25?
Yes, so GEM effect is totally zero in Q1 25 and the results are almost like a 9% growth quarter on quarter without a GEM. And GEM was not a profitable business. All the investor knows that it is adding to top line. So as last time I was talking to you, we are saying it will give the margin improvement. So in this quarter, there's a 2% margin improvement has happened. DSO without GEM is less than 100 days. So I think all the indexes are what we have talked to you last time are intact. So maybe investor might have noticed about the GEM going out. So GEM going out is not impacting the company in any manner from a perspective of margin or EPS from the company perspective.
Sure, that margin surely is the one which has remained stable. You're saying also 200 basis point improvement, 2% uptick in terms of a margin when you look at it sequentially. But Mr. Jain, you know what I also want to know, because when I'm looking at just the other businesses, GEM was one of the parts. Could you talk about why we saw a bit of a weakness in the licensing side and what is the way forward? Now, what should we expect for FY25?
Yeah, so I mentioned in my investor call that we lost two large deals. One was political reason with a North American country, where the government deal, where we won the deal, got deferred or cancelled. They didn't want to work with Indian vendor. So that's one deal. Second deal is GEM Q4 revenue. We are expecting it to continue. So these are the two deals which resulted into the shortfall of 20% design. Next year, we are looking 15% growth in the numbers. So on the excluding GEM, so it's excluding GEM, the number will be close to $273 million, and we are looking 15% growth on the top of it.
All right.
And then the margin improvement on by 2%. So 22% can go up to 24% margin improvement.
Also, if we talk about your emac.ai, that has been a big good growth driver for you. And you have launched new platforms on that as well. Talk to us about the latest client addition, the scope of the growth that you foresee here on.
The last quarter, if you observe, there are 16 deals won. The beauty of the 16 deals is they are won in North America. 8 deals we won in North America. Then we won the deal in Australia, we won the deal in APAC, we won the deal in 3 deals in India, we won the deal in Middle East, we won the deal in Europe. There are very hardly any product company in the world which would have all the 6 continents coming together to win the deals and growing the market. So this shows the emac.ai technology, which is so unique, which is making the customer building their own solution or signature solution using composable technology. So this composable technology is very, very exciting. We had 300 people conference within Intellect in first week of April. And Purple Fabric and the AI investment now come to that stage where we are using our 7-year investment in AI plus generative AI to create and launch a new product called Purple Fabric, where people can convert enterprise knowledge to enterprise intelligence, and that to connected intelligence. So that is the power of emac.ai. I'm sitting in London giving this interview because we are having a boot camp in London today itself, and then meeting many of the partners, whether it's a service SI partners or consulting partners, are finding emac.ai is the right way where they can put up 329 microservices for action for the clients. So excitement is there, and I think a lot of partnerships are now taking shape in this year. So next 3 years will be very, very interesting for us to build this entire pipeline of partnership-led growth, which could be transformational in nature.
Right, Mr. Jain, just one more point, you spoke about that 15% growth outlook for FY25, margins near the 24% level. So improvement in terms of margins as well as in terms of the growth. But any concern that could come in that, maybe that is a possibility you will not achieve that 15% growth. What is the risk that you're factoring in there?
With a product company, risk are always signing some licenses because licenses deals are big enough size. So those risks are there, and second risk is quarter on quarter. So every time these jumps happen, it's a volatility happen in the stock is not related to the company, but the way market perceives it. So the quarter on quarter traction still we are not able to communicate to the investor that this company is not quarter on quarter. It's a 3-year company. I was listening to the previous conversation called terminal value of the company. I think investment is made on terminal value. That will be the right value for next 3 years. What Intellect can do and deliver is what we are excited about. And that's what our agenda is as a management team to work on.
Absolutely, Mr. Jain. Thank you so much, for talking to us, giving us those insights as well in terms of the growth, the outlook, terminal value is what you spoke about. But thank you so much, Mr. Jain, for joining in with us this afternoon. That was